Silver entered a short squeeze setup hours ago. The shares available to short SLV, the largest silver ETF, have fallen to zero. It doesn't take a genius to recognize what's coming next. An MFing moonshot. For historical context, we were trading at $4 in 1976 and at 54 years later. So it could take another 4 years from the current $40 to $500. Some silver miners will go totally off the rails. They will 1000x, and back then some reached 3000x. The squeeze will probably be so enormous that some people who have suppressed the price will end up in jail. Folks, silver is back above $39 today. This wasn't a false breakout. These prices are here to stay. And the days of $35 silver, I have a feeling, are long gone, especially when I share this article with you. So folks, make sure you grab your precious metals right now while you can still get them at a reasonably cheap price, because most people will be buying their silver after it's already went mainstream and exploded. Most people will be buying silver when it's already broken out. You want to get in before the curve. When most people are buying, you should probably be selling. And when most people are selling, you should probably be buying, because most people buy high, sell low. It's supposed to be buy low, sell high. So right now, folks, take advantage. We are in a very interesting time. This article came out today, July 21st. So it's fresh off the press. It is my birthday, by the way. 33 years old. So yeah, all I want for my birthday is for you to subscribe and like the video. Maybe leave a nice comment down below. That's all I want. That's all I want. So let's check this out. Silver Squeeze 2.0. Vaults bleed metal. Borrowing costs are soaring. Markets brace for unleashed bull run. No metal left to borrow. Investors sound the alarm as silver and gold shortages threaten massive price breakouts. So let's see what they're talking about. Silver and gold shortages. The squeeze intensifies. Silver is at the tipping point. And do you notice how all of this information is pointing towards it's about to do something? We're looking at this right now, and this isn't the explosion yet. This is the pregame, which is insane to think about. Silver sitting at $39, looking at this chart, is just the pregame. That's what most people don't understand that aren't true silver stackers. Silver is hurtling towards a perfect storm in 2025. Driven by unprecedented industrial demand and tightening physical supply. Core indicators suggest the world is on the brink of a historic silver squeeze, stoking bullish bets and igniting fear among short sellers. Now, understanding the short squeeze. A short squeeze occurs when traders who have bet against silver by borrowing and selling it expecting lower prices are suddenly forced to buy back, often at a sharply rising price, as bullish forces become overwhelming. See, this buying can dramatically accelerate price spikes as seen in previous commodity shortages. So the mechanisms of scarcity, 3 red flags. 1, skyrocketing lease rates. And I actually mentioned this in a video a couple days ago. This is important. Silver lease rates, the cost to borrow the physical metal, have exploded past 6%, their highest level since 2008. Normally, these lease rates hover close to zero in liquid markets. The current spike signals that holders of physical silver are extremely reluctant to lend, either due to razor-thin inventories or anxiety about further price surges. Industrial demand, especially from sectors like solar and EVs, is straining supply chains. We are seeing a massive silver squeeze happen right before our eyes, while silver's already in 14-year highs with a massive rally happening. Everyone wants a slice of the silver pie, but there's not enough pie to go around. And when the market adjusts to silver's true value of the intrinsic value silver plays, that's when we will see something big happen. And it is happening. Experts underscore that such leaps in lease rates nearly always precede aggressive price rallies as the shortage deepens. During silver's 2011 bull market, a similar lease rate escalation sparked a scramble for physical metal, sending spot prices to the brink of $50 an ounce. So last time we saw something like this, silver went to 50. LBMA silver stocks plummet. Yikes. LBMA silver vaults are nearing empty. Free float of 155 million ounces, with paper claim ratios soaring from 20 to 30 and 1 in 2020 to 40 and 50 and 1. Now only 2.5% need to swap paper for physical to break the LBMA, right? Because most people don't turn their contracts into physical. Most people just sell them out, right? That's what most people do. That's how they're able to portray this facade of this price suppression. 6% lease rate screams stress. Silver squeeze alert, code red will kill the EFP loop. If and when that happens, everything is going to fall. Everything will start to crumble, because that is the only reason silver is still $39. The LBMA is the world's central hub for physical silver. Its stockpile has recently dropped to around 23,791 tons, or 793 million ounces, the lowest in years, putting extraordinary stress on global supply chains. LBMA vaults have shed more than 128 million ounces since late 24, and the ratio of available silver to ETF holdings is now at parity, leaving minimal free float metal for new deliveries or emergencies. Geopolitical turmoil and tariffs are accelerating outflows as inventory is drained to satisfy delivery obligations elsewhere, especially on COMEX, the US Futures Exchange. Now, backwardation, where future prices are lower than spot, highlights the desperation for immediate delivery. Everyone is realizing if you can't hold it, you don't own it. You might think you own it in some vault. No, you don't. And it's about 200 or 250 to 1. So every ounce of silver you own, 200 other people theoretically own that same ounce. If everyone tried to turn their contracts into physical, it would expose this. And that's basically what is starting to happen. SLV borrow shares are collapsing. Silver's entered a short squeeze setup hours ago. The shares available to short SLV, the largest silver ETF, have fallen to zero. It doesn't take a genius to recognize what's coming next. A moonshot. For historical context, we were trading at $4 in 1976 and $50 at 4 years later. So it could take another 4 years from the current $40 to $500. Some silver miners will go totally off the rails. They will 1,000 times their profit. Back then, some reached 3,000x. The squeeze will probably be so enormous that people who have suppressed the price will end up in jail. And to some extent, that wouldn't surprise me. If JP Morgan's employees can get sent to prison for spoofing, then something like this is which is on a much larger scale than just placing some false buy or sell orders on the exchange. This is a much deeper, more sinister way to suppress the price. And ironically, a lot of JP Morgan's employees are head of the COMEX as well. The iShares Silver Trust SLV, the world's largest silver ETF, faces an acute shortage of lendable shares. As of July 25, shares available to borrow for opening new shorts have repeatedly dropped to zero. This means new short selling is severely constrained, and existing shorts face mounting pressure and higher borrowing fees. In classic squeeze conditions, as prices rise and shorts are forced to exit, a feedback loop intensifies the crunch. Quote, when you see that there are zero shares available to borrow for SLV, brokerage firms have no shares left to lend. This can lead to risky situations like short squeezes, where short sellers are forced to cover, driving prices higher. A perfect storm? Why now? Silver is facing a forecast deficit of 150 million ounces for 2025, propelled by booming industrial use in green tech, solar panels, military, and EVs. Yet mining output remains flat, with significant new discoveries on the horizon, and as a result, inventories are being exhausted at an unsustainable pace. Spot prices already at 38.60, now 39. A 35% surge year to date may only be the beginning if these structural imbalances persist, which they will. The record-breaking supply deficit we've had for the last 5-6 years is only going to continue the next foreseeable future and get worse. Some analysts warn that if a catalyst arrives, as it did with nickel in 2022, silver could witness a violent rally, potentially driving prices into 3-digit numbers within days. And they do say 90% of the movement happens the last 10% of the leg. The underlying message is clear. Paper-based financial products can simulate supply only so long. The physical constraints are growing undeniable. That is so true. Like Ted Butler always said. They can try to suppress the price and pull it off for so long, but something that is as needed industrially and to make the world go round as silver, to be able to suppress something like that, it will not hold. Eventually, the facade will come to light, and silver stackers will get the last laugh. You can only simulate supply for so long. Simulate, right? They're creating a facade that there's that much physical metal out there, but there's not. Gold. Institutional shortages and delivery barriers. While silver grabs headlines, gold is also confronting supply stresses, though with unique dynamics. So, this is from in Chinese. So, seismic development emerged in this is Japan, Tanaka Precious Metals, starting December 16th, 25. They're terminating their gold accumulation plans, no longer receive physical gold delivery, only cash. And that's what happened with nickel. This same type of situation is going to happen. It's not going to be delayed deliveries. It will be, you can't get it, period. This is a major shift for savers who have relied on physical redemption as an inflation and systemic hedge. What does this mean? Physical tightness is intensifying in global gold markets. Trust in paper gold will be shaken. Systemic warning sign. And here's the conclusion. Both silver and gold are demonstrating hallmarks of systemic shortages, surging borrowing costs, collapsing vault inventories, and restrictions on physical redemption. For silver, the squeeze may be reaching its boiling point as industrial demand collides with flat supply, creating the potential for not just elevated prices, but an historic realignment of the physical versus paper markets. In gold, institutional constraints and policy changes like that of Tanaka's serve as scarlet flags. In an age of rising uncertainty, the scramble for precious metals is accelerating, and only those with direct access may weather the coming storm. And that's actually a really good point. Producers will turn into the consumers, and the consumers will turn into the producers. Those that have the silver will be able to set the rules, right? Because they still need it to make the newest, latest iPhone, to make Teslas, to make nukes, to make drones and EV. They need the silver. So they will be willing to pay even higher prices, because if not, they can't make their products, period. So anyways, I thought that was a really good article. It explained a lot, especially with this side of things, not even going into all of the other reasons why silver is extremely explosive. If you've been watching my recent videos, you know those other things. I'm not going to mention all of them here. Just know that there is a lot happening and a lot about to happen as well. So go check out my recent videos. I've covered everything, all the biggest news, and make sure you subscribe. Make sure you like this video. Make sure you comment. Appreciate all of you. Go join the Secret Silver Society, patreon.com/silverslayer. Go buy some merch from ag47apparel.com, or, support, buy from Miles Franklin. Send an email to info@milesfranklin.com. Let them know Slayer sent you. Helps me out. I love you all. Thank you so much for tuning in. This was Silver Slayer. Veterans, stick around. I got something for you as well in a second. I will see you guys tomorrow. Peace. Folks, I'm so excited to announce that I've partnered with American medical experts, whose purpose is helping veterans get the medical benefits that they truly deserve. Over 17 million veterans aren't receiving their full benefits, and if this is you or someone you know, then act now. American medical experts are offering free consultations through our med team to see how we can help. The med team offers board-certified doctors who have experience working with the VA, comprehensive medical evidence for services like mental health as well. Some of these include your Nexus letter, your DBQs, your TDIUs, your AAs, and more. I want to personally thank American medical experts for helping veterans, but also giving me an opportunity to help veterans as well. Click the link in the description or the pinned comment to get a free consultation through our med team. Thank you so much for listening, and God bless.